Welcome back to Income Trading 101. Today we are going to take a look at Yearn, the Yearn governance token, symbol YFI. It's another one of the significant decentralized finance platforms. It's great for yield farming and creating additional yield on stake tokens. So they have a token that I believe it was listed back in mid October 2020. We're just going to take a quick look at it tonight, the way we always do. And of course, today is February the 21st, 2021. So let's go ahead and expand this bad boy out. It is sort of interesting. I don't look at volume a whole lot, but when I see the way volume increases on this token as it goes higher, that lets me know that there are possibly some resting bulls that either get a bit of FOMO or they get excited when this token has an update or has a couple of updates in a row and they really push it higher. But rather than get into that, we're going to go ahead and do it like we always do. I'm going to start off with the moving averages. And, you know, it's been great. I've gotten some comments on different videos, and honestly, I like to be as methodical as possible. There are a couple of other indicators that I use on my own. But for this channel, I just want to be consistent so that we can have a conversation that really carries over from asset to asset. You'll realize that technical analysis can be applied, if used consistently, it can be applied to a number of different assets. So here we go. We did our usual, got a 10-day, a 20-day, and a 60-day because we're using one-day data right now. So, you know, the 60-day really doesn't even get going until mid-December. All right, this is a very new, very young token, but you can see that the moving averages have actually been pretty effective. The 10-day got a cross over the 20-day. When the 20-day was relatively young. Otherwise, it probably would have crossed sooner than that. But you have this cross that happened back in November and pulled on higher. We saw a little temporary down move and then again an upward move. Not sure you would have caught that part or not. But, you know, another thing I don't talk about on this channel is the idea of trailing stops, or at least making sure that you design the trade in such a way where you can, benefit from these maximum price movements. So a couple of different ways to do that. And right now we are still benefiting from a cross in the 10-day, but it does appear to have pulled back some since we've had these the last 4 days of downward price movement. We do not have a cross with the daily charts, but I bet as I drop it to lower, so there you go. I dropped it to a lower time frame. This is the 4 hour charts, and with these, I do like the way it caught this move here, and I like to see how it handled November. We saw that move in November where the daily actually made the cross late. Just as I thought, the 4 hour level, that 4 hour made a cross on November the 6th. Whereas let's just take it out to the daily again. So on the daily charts, we got the cross on November the 11th. That's huge, right? So crossed over on November the 11th. And the problem with that crossover is that you would have missed all of this up move, right? And actually entered when we had a slight down period, and then it obviously went higher, which is what made this made this green line remain above the red. But I'm sure it was a little tricky when it came to the actual chart, the live chart during that period. But when you take it down to a lower time frame, you realize that it was in November. In November, we got the cross. We got the cross of the 10-year and the 10-day and the 20-day. So you could have ridden that higher. You know, I've talked about, looking for cross signals, crosses of those two moving averages, the 10 and the 20 period, to be signals for when to enter. And there are a couple of different ways you can look at when to exit. One of those being, when price crosses your 10 or your 20, you can look to exit. But another way to do it is to use one time frame to enter, and you can try and hold until you get across in the other time frame. So there are any number of ways you can create a nice little straight trading strategy. It's going to vary from asset to asset. So I'd love to tell you that, hey, if you always enter using the shorter time frame and exit using the larger one, you're going to capture the full move every time. Not always true. You might just benefit from staying in one time frame based on the movement in a particular company, but or asset class. So you just really have to look. You have to look at all of this and see what is most relevant and what is the most tradable. So even as I look at this graph with the 4 hour, part of what I don't like is how closely the 10-day stayed and how often this was all kind of muddled. You have some clear movements higher. See if we can pull that out. We'll stretch that out a little bit. You have some periods that are clear. Like I would have looked once all three were in line again, the 10-day higher than the 20, higher than the 60. Then you could have caught part of this move here and maybe exited around here when price clearly fell below the 10-day. But the problem is there's so many times when this really was muddled. Both the 10 and the 20 day period moving averages are in between or running all over price themselves. I don't like that, and that lets me know that ultimately the 4 hour is not where I would look to trade it. Of course, if as I lower it to to a 1 hour to even a 30-minute, I'm going to see even more of that. Part of the reason is because of it's overfitting a curve. So basically, when you have an indicator and you make it so tight, or you make it so exact to that stock or that asset, in this situation, it's actually a token. When you make it so close that price and your indicator is sort of right on top of each other, it makes it difficult to give and stay with good sound analysis. You've made your model fit it so well that it actually may screw things up and make you think that things are there that actually aren't. Let's see where we're about a week off of this. Don't worry, I'm going to tighten this up here in a minute to give us a little better indication. So the lower time frame certainly can be great for either finding a buy or even a sell, or you can consider using multiple time frames to enter and a different one to manage or exit the trade. So let's go ahead and get rid of this. And we're going to dive over into the MACD. I've always liked what the MACD shows. And given that this has just been an uptrend, I'm sure that on the 1 day level, the MACD isn't going to be as valuable or as useful to us. But that being said, no surprise here. Although, look at this. I mean, we have some very clear. We had a cross above the zero line. We had a cross in the oversold. This is the overbought periods. You would actually look to go lower. We went a little bit lower here. We did go lower. And mind you, this is a very expensive token. I should probably point that out. This move from, say, we'll call this December the 8th, when the closing price of the token was 25,404, all the way to this crossover here on January the 3rd, where the closing price was 23,728. So that's, $2,000, but this thing obviously can rip in different ways. I will give a warning, and here's my warning. My warning is that you don't want to step in front of a train. And what I mean by that is if you are working with a stock, a cryptocurrency, a futures, whatever you're working with, whatever you're trading, if the dominant move is higher, then trying to catch these interim sell signals can be just sort of painful. They can be really painful. You're better off sticking with the trend, and it's just a matter of when you're going to get in order to be able to trade the trend. So like right here on February 13th, we had a cross with the MACD line and the signal line. This would above. This is in the overbought category, so this would have been an indication of a sell. And sure, you could have made, if you done that on February the 12th, the close was 44,200, and if you waited for this cross on February the 17th, the close was 42,731. So again, a couple $1,000. But man, I wouldn't want any part of that just because that was a significant move with a lot of volatility, and you're not talking about an inexpensive token. This is an expensive token. So just looking at this is on the 4 hour. We'll drop it down to the 1 hour and see if that's any better. So again, I would only, given the strong up move of this chart, I would only be looking to buy. I would be looking to buy pullbacks. I'd be looking to buy all sorts of things. So, when you're getting these buy signals below the zero line, I mean, those are the ones I would definitely pay attention to and try my best to take advantage of. But, I'm sitting here adding more data, and the MACD line is just getting more and more chopped up, more and more confusing. So, here on February 15th, you had a pretty nice buy below. And even recently, February the 21st, that's today, this afternoon, there was a crossover buy in the below the signal line, below zero. So we'll see how that plays out. But I'm going to go with kind of unconclusive. Nope. Sorry, my data apparently wanted to. I guess I chose 15 seconds. That wasn't my desire. I don't trade that quickly. Now at the 15-minute level, I do like. Look at this on February 20th. This would have been yesterday. Nice little crossover. In the evening, and you could have tried to exit that according to this today earlier. So you would have had in this bar. Let's see. That close was 44,355, and down here the close was 42.7. So that's about $600 that could have been made. A little more than that actually. Sorry. Is it 40? Trying to get it right back there. So 177 and 42. Okay. So yeah, so you would have had about $1,400 there. It's not bad for a few hours of work. So I do like the MACD, much like the moving averages though. You really have to figure out which time frame is going to work for the specific asset, the specific one that you're trading, because this might even be different. It's not even just a crypto versus equities thing. YFI versus the Aave token, or versus we looked at bond yesterday. I mean, each of these is going to trade differently and have different there's sort of nuances in the marketplace. So you really just have to see how the indicators react in your particular whichever company or token or whatever you're looking at. So that is it. I'm going to just pull this out a little bit. We're not going to look at a Fibonacci analysis because Fibonacci is all about retracement. And even though we've had these slight pullbacks, they appear to be more like an Elliott wave, different parts of the wave versus an actual retracement that we could measure out and see. I am curious though. Let's see if we can, let's draw some lines, see if there are repeated repeated levels that are worth taking a look at, or or seeing, because it's just good to know. All right. In fact, we can do this right there. I'm actually going to get rid of that smaller line, delete, go back here. So yeah, so there you have it. This level, the 28,000 level, was really interesting because, you know, back here in December, actually that was in November, it played some resistance. Over here in December, it played resistance. Suddenly, it played support several different times in 2021 so far this year, and we've bounced and gone on off of that. So we'll see what levels end up being important next. Another one that I'm seeing might be this here, straight across. So, you know, again, played resistance. January the 18th and 19th time frame, even somewhat played a little bit of resistance on the 10th, and then, you know, you see how those resistance lines can end up being support afterwards. So very useful, very helpful to be able to look at these and find the levels that will matter. And I don't want to say they matter just because I can draw a line. It's what that line represents. That line represents orders that may be sitting there, or levels that the other traders in the market may themselves see as significant. And so it's good to be aware of those levels just in case you're around them, so that you know that if we go through them, you know, resistance can become support and vice versa. Support can become resistance. So that is it for tonight's video, or today's video, really. I could keep going with some of the nuances, but honestly, when it gets down to it, I think this token is going to go higher. I just think it's taken a little bit of a breather, and I don't trust these pullbacks just yet. Yeah, just don't trust it just yet. Expecting this to go higher. In fact, on some of these, I'm actually more interested in buying the dip, because I truly do believe they're going to keep going higher, regardless of the fundamentals behind them. This is one of the main decentralized finance platforms, and I'm expecting big things out of their token. And no, I actually don't own any. So maybe I myself should be looking to buy a pullback here. So that's it. Hope you guys have enjoyed this video too. Thank you for watching. Hey, if you haven't already done it, please subscribe to the channel. Definitely hit the thumbs up to like this video as well, and I'll be making more videos for you soon. All right, that's it. Have a great week. Happy trading.